Now we are going to learn candlestick. So candlesticks was developed by a Japanese businessman in 18th century itself, and this is used for technical analysis, right? So candlesticks actually typically shows the price movement of a given time frame. The main advantage of candlestick patterns compared to any other chart, bar chart, pie chart, line chart, or any other chart is it gives the four important parameters of the price. First one is it will give the opening price during that particular time frame. It will also give highest price during that particular time frame. Then it will also give you lowest price during that particular time frame. And last, it also give closing price during the particular time frame. So candlestick is the only chart where you can able to understand what is the opening price, closing price, high and low of that particular time frame. So now suppose if you have chosen the chart of 1 hour, each candlestick is a for 1 hour, right? Likewise, if you have opened the chart of 1 day, each candlestick represents 1 day time frame. In that, it will show you what is the open of the day, what is the close of the day, what is the high of the day, and what is the low of the day. So all these things it can able to give you the details. So again, now when it comes to candlestick patterns, we have three different types of candlestick patterns. First one is bullish candle patterns, then bearish candle patterns, and third one is neutral candle patterns. So this is the example of the candlestick pattern. So green color is a bullish candle. This is called as a plain bullish candle. And you can see here, this rectangle box is the body of the candle. And this line above there is one line, right? This line is higher wick or higher shadow. And this lower one is called as lower wick or lower shadow. In bullish candle, prices will open here. If we consider this is a per day candle or a day chart, this is a open of the chart will be opening price of that particular day is this. Once it opens, then bears came into pictures and they took the prices down. They took the prices down here, but after sometimes bull came back very strongly and they took prices all the way up here. End of the day, again, bears came to give some competition, but they were not much successful and prices closes here above. So prices opened below and closes above in bullish candle, right? And the center of the body of the candle is called as median, right? Likewise, we will understand about bearish candle. This is a plain bearish candle, right? But here, if you suppose it is a 1 day candle, prices open above in bearish. Prices opened here for the day, then bulls came and took prices little bit up. But after some time, bears came so strongly that they took price all the way down here and they made the low of the day. Then bulls came into picture to give some competition, but they were not successful and prices closes here. So here bears are in power. Bears are dominating here. That's the reason prices opened above and closes below. So this is a bearish candle example, right? So then let us move to the different types of bullish candle, bearish candles, and neutral candle patterns. So first one is hammer. This is a bullish candle. It is a single candle. It may be of a green color or it may be of a red color, but both are bullish in nature, right? Here what happens? Prices opened here. Then bears came and took prices all the way down here. But after some time, bulls came back very, very strongly. They took prices all the way up here and prices closes here for the day. That is why this is bullish in nature. Likewise, let us see this red color hammer. Here what happened is, here prices opened here. Then bulls took little bit up prices. Then bears came strongly and they took prices all the way down here. But at the second half of the day, bulls came back very, very strongly and they took prices all the way up here and prices closes for the day. That's why it is bullish. It may be red color or green color. Hammer is bullish. Next pattern is bullish pattern, that is bullish piercing. Here what happens is first day is a bearish candle, then followed by prices may open almost equal or it may open little bit down, no problem, but it has to close above the median of the first candle. Okay, then it is called as bullish piercing. So next pattern is again bullish engulf. Here first day is a bearish candle, strong bearish candle, followed by second day candle will open almost equal or it may open little bit low, but it has to close above the body of the previous day red candle. Then only it is called as bullish engulf, right? So next type of bullish pattern is called as bullish Arami. See, bullish Arami is a Japanese word. Means a lady having a baby in her tummy, like that. This okay. So first one is a big bearish candle followed by a small body. It will form next candle. It will be forming very small body, but it should form within the body of the previous day candle. It may form here below, or it may form above, or it may form in center. But anywhere it forms, but it is a small body, and it is called as bullish Arami. So last type of bullish pattern is called as morning star. This is a 3 candle pattern. Here what happens is first day strong bearish, then gap down, open, and it may form neutral form. It may form neutral candlestick pattern. Then gap up open third day and strong bullish candle, and this bullish candle should close above the median of the first day candle. This is a called morning star. This is bullish, very, very bullish in nature. Now let us move to bearish pattern. So first type of bearish pattern is inverted hammer or called shooting star. This is the reverse of hammer. Here what happens is prices here, it may be red or green, but both are bearish in nature, inverted hammer or shooting star. Here what happened is first prices opened here for the day. Then bulls took prices all the way up here. Okay. Then bears came back very, very strongly. They took prices all the way down here and prices closes for the day. That is why it is bearish in nature. Likewise, in green color candle also, green color inverted hammer also, prices opened here below. Then bears took little bit down, but they were not much successful. Then bulls took prices all the way up here. They were actually strong in first half, but in second half of the day, bears came back very, very strongly. They took prices all the way down here, and prices closes for the day. That's why this is called as bearish in nature. Let us move to next type of bearish candle pattern. So this is actually bearish piercing. Like first day will be green, strong green candle or bullish candle. Second, the prices may open almost equal or little bit high of the previous day candle, but it has to close below the median of the first day candle. That is very important. Next type of bearish candle pattern is bearish engulf. Here first day is again green candle or bullish candle, followed by second day prices may open almost equal to the previous day candle, or it may open little bit above, but it has to close below the previous day candle. That is very important. So then it is called as bearish engulf. Okay. Next type of pattern is called as bearish Arami. Here first day is a strong bullish candle, followed by second a small candle will form here. It may form in center of the previous day candle, or it may form at the top or at the bottom of the previous day candle, but it should form within the body of the previous day candle. This is bearish in nature. So last type of bearish pattern is called as evening star. This is reverse of morning star. Again, it is a 3 candle pattern. First a strong bullish candle followed by gap up open, and it may form neutral format. Then third day it will open gap down, and it will form a strong bearish candle, but this bearish candle should close below the median of the first day candle. This is called evening star. Let us move to neutral candles. So in neutral candles, we have something called as doji. Doji is a Japanese word. So first one is gravestone doji. Here what happens is prices opened here for the day. Then bulls took prices all the way up here in first half. Second half, bears came back strongly and they took back the prices down where it has opened. Same price it has closed. Open and close is same, but it has made high for the day. This is neutral. Here we cannot say bulls are strong or bears are strong because both are almost equally strong here. Next type of doji is called as dragonfly doji. You can see here prices opened here for the day. Then bears took the prices all the way down. Second half again, bulls came back and took prices back to the opening prices and closed on the same price of the opening price. Here open and close is same, but it made a low of the day, right? Third type of doji is called as long-legged doji. Here what happens is prices opened here for the day. Then bulls took prices all the way up here. Again, bears came back, took prices all the way down here. Again, at last, bulls came back and they took prices all the way up here, but it closed from the same opening price. So open and close is same, but it has made high and low for the day. A last type of doji is called as four price doji because open of the day, close of the day, high of the day, or low of the day, everything is same. What price it has opened, it has struck there. It is not moved. It has not made any new high or low. And the same opening price it has closed. That is why it is called as four price doji. Next, let us move to next type of neutral pattern. It is called as spinning top. You can see here small body with almost equal higher and lower wick. It should have a small body and it should have a higher wick and lower wick almost equal. It may be green or red, both are spinning top, right? Last type of neutral candlestick pattern is called as I wave pattern. Here you can see here it is actually with small bodies and very, very big higher wick and lower wicks. Small body with very, very big higher wick and lower wick, then it is called as I wave candle. This is neutral in nature.